Phil LeBeau joins us with the details. I am sure he is exhausted. Hopefully he doesn't want to strike. Phil, thanks for being here.
Never fun to cover a UAW strike. I've covered them before. Hopefully I don't have to cover too many in the future as well. Let me go over what is really important for investors to focus on. When you look at the cost of this contract in terms of the labor costs for vehicles, Wolf Research did some crunching of the numbers. And look at this comparison going from 2023 all the way up to what they estimate the cost will be per vehicle in terms of labor costs per vehicle by 2027. Roughly speaking, anywhere of an increase between $800 and $1,100. And again, this is just an estimate. We still need to see the final details of the contract. But this gives you some sense of what the big three are facing in terms of higher costs. I bring that up because remember before this all started, we talked about their all-in hourly labor costs coming in at about $64 to $66 an hour relative to the foreign automakers who are at $55 to $60, Tesla at $45. The general estimate right now, and these estimates are all over the place, but generally speaking, most believe that when it's all said and done, it's going to be anywhere between $87 and $89 an hour for the big three once this contract is done. And that's benefits, that's everything. That's not just hourly wages. So as you take a look at the auto stocks and talking about General Motors, a couple of things to keep in mind. First of all, we just heard from GM officially confirming what we've been reporting all day, that they have an agreement in place with the UAW. Mary Barra says it's good to have it in place. Now it's time for the workers to get back to work. And then when you take a look at shares of Stellantis, there's an important distinction with Stellantis to keep in mind. They have agreed to reopen their Belvidere plant outside of Rockford, Illinois. That is significant because it's not often that you see a UAW contract where an automaker says, OK, we will reopen a facility. Sometimes they've talked about closing a facility and they don't close it, but reopening a facility that's been idled, that doesn't happen very often. And finally, with regard to Ford, just within the last half hour, we heard from S&P, it upped the credit ratings on Ford, more stable outlook, going from stable to positive, I should say, for S&P following this contract being locked in place with the UAW between Ford and the union. Guys, I'll send it back to you.
Wow, a lot of stuff going on there, Phil. Thank you very much for rounding it all up.
Yeah.
Let's trade this one. Dan, really interesting, the labor costs, too, when Phil put up that wall. I don't know if you saw that, but Tesla all the way down at an estimated $45 an hour compared to 89 to, or 87 to 89.
Yeah, and the big story this year is just like the degradation in their automotive gross margins, right, at Tesla. So it just, all that math, you just do the math, like, you know what I mean? So the margins are going to be lower for GM and Ford, which is going to make it that much more hard to service all that debt that they have, make it harder to compete with, let's say, a Tesla that actually has this great market share here in North America, right? And they seem to be pretty good at making EVs. But the story about Tesla today, down as much as it is, I think there's a whole host of things going on. Some of the stuff that we talked about in semis, the Panasonic on the battery front, the guidance that they gave. And I think when you just look at those numbers, you say, how is the UAW not going to go after that Tesla worker there? You put all that together and you say to yourself, oh, well, the bulls on Tesla think that this is going to have a V reversal and they're going to be able to expand those margins back out when they kind of get their manufacturing back online and this and Berlin and all the stuff and FSD full, it's all a pipe dream, man. Like this stock is going lower because the fundamentals are bad. There's not demand for their products, even at the prices after there's plenty of demand for their products, but not, do you understand, to justify a $600 billion market cap company, right? So that's my take here. I just think that all this is coming together at Tesla at one time. And listen, I think the Ford and GM, part of my bear case was that they're going to be strong competitors. They are proving not to be strong competitors. But look at how much Tesla has come in line with them over the last few months.
Karen, you were talking about Tesla earlier.
Yeah, I think it's sort of a convergence of a bunch of things, right? You got that California lawsuit that I don't know on its own that it's much, but this potential labor threat, that is huge, precisely because what Dan's talking about, the gross margin coming in a lot, and it garners a multiple that the other companies could never dream of having anything remotely close to that. And so also, if the consumer is really strapped and just EV in general, demand goes down, regardless of whether it's from Tesla, or I agree with you, though, on GM and Ford not getting it together, or any other competitor really yet. That's been disappointing. So I had to throw in the towel for GM.